Welcome to Elder Savvy. I am Anna Seery, the Director of the Pembroke Council on Aging. The goal of Elder Savvy is to provide content-related topics from experts in the community to enhance the quality of life of our seniors. My guest today is Dave Tourtillott of Homestead Mortgage. David is well known throughout the reverse mortgage industry and has been assisting the senior adult market since 2003 throughout the New England area. David specializes exclusively in reverse mortgage financing and is only one of 128 certified professionals in the entire country that have earned the CRMP designation, which stands for Certified Reverse Mortgage Professional. David is a South Shore native and currently resides in Scituate with his wife of 21 years and his 8-year-old daughter. David is a member of the National Reverse Mortgage Lenders Association and adheres to their strict code of ethics and best practices policy. David is passionate about helping seniors and takes great pride in treating his clients with the respect and integrity they deserve and treats all clients and their families the same way as he would treat and advise his own family. David conducts many reverse mortgage workshops at local senior centers throughout the state of Massachusetts.
Thanks for having me.
So, first off, what exactly is a reverse mortgage? Can you explain that to us a little bit?
Yeah, and I'll try and keep it simple. A reverse mortgage is just a way for someone who's 62 and older to access some of the equity in their home to supplement income. And retirees are on fixed income, so they can supplement their income. They can use it to age at home, remain in their home, do some modifications to the bathrooms, the hallways, things of that nature. Just really more of a financial stability type of tool.
Mm-hmm. So you use a term HUD and FHA. What do those acronyms stand for?
Sure, those are government agencies. So HUD is Housing and Urban Development,
okay, and
FHA is their admin agency, which is Federal Housing Administration.
Okay. And they were designed and federally insure and back the reverse mortgage program. When did they start backing them?
Great question. So back in 1988, during the Reagan administration, AARP and other organizations like that were lobbying Congress to come up with a mortgage for retirees so they could supplement their fixed incomes. And this is what they came up with. It's federally insured and backed. You have to be 62 or older to qualify. And it was put in place, and their mission simply was to provide financial stability over a period of time. So it's insured in respects to this loan is a non-payment loan. So the interest accrues on what's borrowed. So if the loan balance were to surpass the value, the insurance would kick in, and there's no liability for the heirs or the children of the estate or the borrowers.
So let's just make that a little simple.
Okay.
So let's just say it's $100,000.
Mm-hmm.
They can borrow $100,000 towards their mortgage.
Yep.
And they're getting a monthly payment from that?
Yeah. So let's use a $300,000 home with a 70-year-old.
Mm-hmm.
They live in a single family. They could get access to about $180,000 of the $300,000 valued home.
Okay.
The $180,000, depending on what they want to use it for and what their purpose is, can use to pay off existing mortgage liens, which would in turn remove or eliminate the monthly principal and interest payment with those mortgages. Or if they don't have any mortgages, Anna, they could just simply set up a line of credit and access the money as they need it.
Okay.
Or they could opt for a payment, an automatic payment out of that $180,000. So you can take it in multiple ways. You can actually pay off some liens, reverse mortgage liens or any liens on the title, take a lump sum at closing to maybe fix the roof or something along those lines, and then just take a payment, a regular payment monthly from the rest of the money. So there's multiple ways to block out the money. Lump sum, line of credit, a term payment, and then you can change the method in which you take the money going forward.
So if they say at first I want monthly, and then they maybe might need a handicap ramp or a accessible shower bathroom, they could then borrow a lump sum?
Yep, they could borrow more money from their line of credit.
Okay.
And the money, when they borrow it, has no monthly mortgage payment obligation. So they're basically spending some of their house for items like modifications to bathrooms and roofs and things like that. And when they borrow it, it doesn't affect their cash flow because, again, there's no monthly mortgage payment obligation. That's the biggest difference when you think of a mortgage. A regular mortgage, you borrow money from the bank and you have a structured payment, whether it's 20 years or 30 years. A reverse mortgage, hence the name reverse, the bank pays you your equity without you having to pay them a monthly payment.
Okay.
They'll get what you borrowed with the interest at the end of the loan.
All right. So who qualifies for a reverse mortgage? I know you said somebody that was 62. What are some of the other qualifications?
Yep. All mortgagors have to be 62, minimum age of 62 to qualify. So there's no maximum age. I have clients in their 90s, so there's no maximum age, but the minimum age is 62. Has to be a primary residence. It can't be a second home or investment property. And you have to have roughly, say, 50% equity in the home. It doesn't have to be mortgage-free. That's a misconception. Most folks think they can only do a reverse mortgage when they have no existing mortgages. But I have many clients who do this mortgage in order to pay off the regular mortgage to eliminate the payment to increase their monthly cash flow. So 62 is the minimum age, has to be a primary residence, and it can be a single-family home, a condo, a multi-family home, as long as that's your primary residence. And that's basically it.
Some of our seniors have their homes in trust. Can they still get a reverse mortgage if their home is in a trust?
What we do with folks that have their property in a trust is revocable trusts and irrevocable trusts. In either case, I'll always obtain a copy of it before we proceed forward and have it reviewed by the legal department because I'm not an attorney. So in most cases, revocable trusts meet the requirements for the reverse mortgage. Irrevocable trusts are a little bit more tricky because the property is no longer in the borrower's name.
Okay.
But it can be structured in a way where you can do an irrevocable trust. The best way to do that is have me have it reviewed and then come back to you with the tweaks that needs to be done. But irrevocable, hence the name, it can't be changed unless the trustees agree to changing it. But it can be done in a trust.
Okay.
It just has to be reviewed.
Who would be a good candidate for a reverse mortgage? Maybe a couple of scenarios of
Yep.
who should consider this.
So when I sit down with clients, we go through probably an hour, hour and a half consultation. And I would say this, that anybody who wants to remain in their home, that's the intent, to remain in their home, and that's the best and most appropriate option for them, then a reverse mortgage is a good tool to consider, among other options. Someone who doesn't want to stay in their home, it's probably not a good idea to consider a reverse mortgage unless you're going to be there a minimum of 5 years.
Okay.
So
if somebody knows that they'll move if they lose their spouse, then that's not a good...
Well, that's an unforeseen thing. So I wouldn't not do it unless the spouse is sick, currently sick. It depends on a lot of things, but generally speaking, if their intent is to move after their sick spouse is gone, then it might not be a good idea.
And what happens if they do go into a reverse mortgage and unforeseen events happen, and is there repercussions if it's under 5 years?
Nope.
Okay.
That's just a general rule of thumb.
Okay.
From me, that's not a HUD rule or an FHA rule. Because there's costs up front, I hate to see them incur those costs and then sell the home and not make the costs up with time, appreciation. So it's just a general rule. So when I ask someone, why are you looking into a reverse mortgage? They might say, I want to remain in my home. I have no interest in going into a nursing home. This is where I want to stay. It's comfortable. It's one level living. Then that's a good thing, a good start.
And more, we hear people want to stay at home.
Yeah.
Aging in place is a term that's out there, and staying at home. And if this is a way that they can afford having help come in if they need it, rather than going into a nursing home, then it is a good, it's an option to consider.
Yeah, I've sat down with many clients and the families want to set up in-home care in the house because mom and or dad do not want to go into a nursing home. So they'll take the money from the house and pay someone to come take care of them.
So what are the borrower's responsibilities after they take out a reverse mortgage?
That's a very important question because there are responsibilities and it's good to touch on it. When you take out a reverse mortgage, you're still responsible for paying your property taxes homeowner's insurance, flood insurance if applicable, and if you live in a condo, your condo fees. So those are all responsibilities the borrowers have with or without a reverse mortgage, but it's important to know that you still have to pay those items after you do the reverse mortgage, and it's important to keep them current, because certainly you don't want to fall behind after you do the reverse mortgage and then be in default with your town or city.
Yeah, good point.
Yeah.
Really good point. Reverse mortgages are federally insured and backed. What does this mean to the seniors who are borrowing and their family?
Mm-hmm. So every borrower that does a reverse mortgage, there's a cost inside of the overall cost. It's called an insurance fee. And that upfront mortgage insurance premium is paid to HUD one time. And what that fee does is it makes a reverse mortgage a non-recourse loan. Non-recourse means there's no other way to recoup the payment except from the home itself. They can't recoup the payment of the loan from the kids, the borrower's savings. That insurance fee makes sure that there's no personal liability for the kids to repay the loan or the borrowers. So if the loan balance, the borrower borrowed all the money from the reverse mortgage, and they outlived the loan, they lived a long time, and the loan balance accrued interest above and beyond what the value of the home was, that insurance fee would kick in. There wouldn't be any equity in the property left for the kids, but they wouldn't go to the kids to get the shortfall. Okay. The lender would recoup that from HUD because of the fee that was paid up front out of the house's equity. So it's ensuring that there's no liability or burden left on the kids as far as the debt goes. If there's any equity left in the property when the kids inherit the home, that's their equity. It's not shared with the bank or the government. So that's what the insurance does. And the backing part is HUD and FHA back the loan in terms of if the bank that lent the money to the borrowers goes out of business during their lifetime, HUD is already on record at the Registry of Deeds as the beneficiary of taking over the loan and continuing the payments to the borrowers. Okay. So they don't have to worry about the bank going out of business, so they insure it and they back it. And that's what that fee does. So going out of business
or the bank being sold,
they fold.
That is the protection for the senior.
Exactly.
Okay. Was there a time in reverse mortgages where there weren't as many protections here as the system is set up?
They've always been, well, this loan, the federally insured and backed loan, has always been federally insured and backed. Okay. There have been other versions of reverse mortgages, but those loans were not federally insured. Okay. They were proprietary with lending institutions. But right now, the only game in town nationally is the federally insured reverse mortgage program, also known as the HECM, which is an acronym for Home Equity Conversion Mortgage. Okay. That's what they call their product. But there's been, to answer your question more clearly, there's been more changes and safeguards added to this loan over the past year and a half, and we'll probably get into those as well.
Okay. I know that most people use reverse mortgages to remain in their existing home, but it is true that seniors can also use a reverse mortgage to buy a new home if they are considering selling or downsizing, right-sizing, or upsizing?
Mm-hmm. That's true. So in most cases, if someone wants to remain in their home, they would be doing a refinance and using a reverse mortgage to refinance of their existing home. If I meet with a client and we determine that their home is too big and they're considering moving because they want to reduce their expenses by getting into a smaller place, a more manageable space, so they could sell their existing home and use some of the money from the sale as a down payment on the next home, and use a reverse mortgage to purchase it so they have no mortgage payment. So you can use it to refinance your existing home or buy another home. But it has to be a primary residence. So you could keep your home, but you would then have to turn into an investment property and buy another home. But most people sell their existing home, take out their proceeds, and buy another home using a reverse mortgage.
So what would happen if a couple got a reverse mortgage, they want to stay at home, they they want to age in place, but then through maybe some chronic diseases, illnesses, injuries, one has to go into long-term care, into a skilled nursing facility, and if they meet the financial obligations where they could go on Medicaid for the nursing home payment without having to sell the home, how does that affect all of that? Because that's what happens the skilled nursing home is just so expensive.
Mm-hmm.
Does that factor in?
When you have a reverse mortgage, it's equity. Just like when you apply without any mortgages on your home for Medicaid, you get up to, I think, $750,000 excluded. So it's viewed the same way. If you do a reverse mortgage, it doesn't change the viewing of that equity.
Okay.
It's only when you take the money out of your line of credit and place it into a savings account position, now you're affecting the asset side of the means test, if you will, because I think you have to have less than $2,000 to your name. If left in the line of credit, it's just viewed like equity, even though it's accessible. It's today, anyways. It's viewed as equity and won't have any effect on Medicaid. They just have to make sure that they're leaving it in the line of credit and that they're managing their assets, keeping that below $2,000. It's never considered income. That's important to know. The income side of the means test, reverse mortgage proceeds are loan proceeds. So Social Security does not identify them as earned income.
Okay.
So it's not going to affect the income side, but if they take it out and put it into their checking account, it will affect the asset side.
So let me ask you about your relationship with clients. So if somebody comes to you and they work with you and obtain a reverse mortgage, are you there to guide them as life events come up? Are they able to call you and say, you know, we need to put a downstairs bathroom in that's handicap accessible, we want to switch this? Is that like a continued relationship you have with your clients?
And it's a great point too. With reverse mortgages, it's very important to work with someone who's local and certified. Again, there's only one game in town nationally, so no reason to work out of state long distance because it is a close relationship. When the loan closes and they have questions going forward, they can call me and they can ask me for advice on, hey, this is what we want to do with some money. We're thinking of putting a bathroom downstairs or widening our hallways. We want to stay here. Can you help us get more money out of our line of credit? And I do that for my clients and their kids. It's important for the kids to have a contact too, because 98% of the issues with reverse mortgages is after the loan closes, not really while you're getting the loan in place.
Is there ongoing fees for your services, or is there's initial fees when somebody takes a reverse mortgage? So would they be able to sit down and meet with you and you can explain all of that to them? Okay.
Yeah, there's no ongoing fees. I get paid one time up front, and my commitment to my clients is whenever they need to contact me for anything, whether that's 2 years, 5 years, 15 years down the road, they have access to me. They have my business card and my cell phone. That's another important aspect. You want to work with someone local and certified that will do that for you. I've helped many kids after their parents have passed away through the process after.
Yeah, and it's tough, and there's just so many moving targets too.
Lots of variables.
Yeah.
Lots of variables.
Talk about some of the positive changes in Safeguard that HUD has implemented in the reverse mortgage program. I think it's really scary. I think, you know, for a lot of our seniors, and for most people, your home is your biggest asset.
Yes.
And then and it's also your sense of security. So what are some of, how do we protect our folks?
Well, with reverse mortgages, there's a safeguard in place, and it's been there since inception. It's called counseling. When you sit down with a certified professional like me, we can't move forward until you complete a mandatory counseling session with a neutral person at a counseling agency that's been trained by HUD or FHA. That's a safeguard. That's great because I do this for a living. HUD wants these seniors to sit down with a neutral person who is trained by them on the pros and cons of reverse mortgages, and they get a certificate. Then they can come back to me or whoever they're working with, and we can sign the loan application paperwork, do the appraisal, and all the same things you do with a refinance. Some of the changes, the other safeguards that have been put in place since April of last year, and this is why you're seeing a lot of positive press out there versus negative press, is they lowered the insurance fee, or they put it on a sliding scale. So it's either 0.5% of your home's value or 2.5%. They used to always be 2% for everyone. So the lower end is more appealing now to people because it can be several $1,000s reduction in closing costs. The other change was they're protecting non-borrowing spouses, which are folks, say you have a married couple, 165 and 160. Well, the minimum age is 62. So there'll only be one borrower, but you have a non-borrowing spouse who's 60. that non-borrowing spouse prior to, a year and a half, 2 years ago, had to sell the house or pay the loan back once the borrower passed away. Now they're protected. They can stay there as long as they pay the property taxes, homeowners insurance, and that's a positive change. The other positive change is historically there's no monthly payment with reverse mortgages, so there was no way to escrow for property taxes and homeowners insurance. Now they've found a way to do set-aside accounts to assist with those items. And not everybody's required to have a set-aside account to cover real estate taxes and insurance, but as they go through the underwriting process, they'll determine that, whether or not it's necessary. So that's a safeguard, because if someone's income is such that, yes, you qualify for reverse mortgage because you're 62 and you have equity, but what if you go through all the money and 10 years down the road, you've used up your reverse mortgage proceeds, and now you're back to your income, and the cost of living has increased, and you're falling behind on real estate taxes and homeowners insurance and things like that. So there's an income test, a credit test, and they're looking at assets now. So really what they're doing is they're making sure that a reverse mortgage is a good long-term option for the senior, not a short-term solution.
The closing costs, and that's a percentage of the loan?
Yeah.
So that there's not an upfront large amount of money that folks need to come up with?
Right. The closing costs are always financed in. What does that mean? That means if you qualify for a $200,000 loan and your costs are, let's say, $10,000, they're going to take the $10,000 off the top, and you'll be left with $190,000.
Okay.
So everyone's costs are different because it's determined by the home value and how much they're paying off with mortgages. So I've had clients that have had zero costs, and I've had clients that have gone all the way up to $15,000 in costs. The costs aren't set the same for everyone. They're set by percentages of the home value, and then they can negotiate the cost based on how much they're utilizing right away to pay off existing liens. So. But there's three parts to that. There's the upfront insurance, which is either 0.5% of the home's value or 2.5%. Then there's an origination fee.
Okay.
The origination fee is paid to the institution that's helping them facilitate the transaction. And then your traditional refinance fees. There's a closing attorney. They record the loan. They do the title examination, their closing fee. So all of those, there's three components, but they're all financed in.
So do you only do reverse mortgages? You don't do regular mortgages?
Yes, that's all I do.
Is reverse mortgages?
I specialize exclusively in reverse mortgage financing.
Okay. All right. So tell me how important it is, and I know that we've kind of touched on this, but we're just have about 5 minutes left now. How important is it to seek out somebody with the credentials of CRMP versus working with an advisor who is located in another state? You touched on that a little bit. Tell me why that's so important.
Well, the loan's the same in all 50 states. So HUD and FHA designed it, and anytime there's a rule change, they'll change a rule, and everybody in all 50 states, everybody being the lending institutions, adhere to the new change. So it's a level playing field in terms of the mortgage. So if it's a black Ford Model AT here in Massachusetts and a black Ford Model AT in Texas, why would you go to Texas when you can get the same product from someone you can meet, build a relationship with? Going to the next step is a CRMP. There's currently only 128 individuals that have the CRMP designation in our space. And it's not a Saturday 1-hour course where you walk out with a certificate at the end of the day. It was a curriculum that was put together by the National Reverse Mortgage Lenders Association, and it was designed to create a culture of individuals that were going to go out and treat the seniors with their interests in mind and have a little bit more knowledge of this product and other alternatives, so we know that we're doing what's in the senior's best interest, not our own.
Generally, when you do a closing or when you're working with a couple, do you also, if they would like you, include like all of their family to be there? Not all, but maybe their couple of primary people, their power of attorney, and their main support system, I guess. And so you're willing to work with all of them as opposed to just the couple?
I'd prefer to have the children there. and or their friends or trusted advisors, certified financial planner, because if everybody's on the same page and I'm educating everyone, there's a lot of aha moments. So I'd prefer to have the children, the family there, because there's a lot of misconceptions, and when we go through the consultation, in many cases the kids are going, oh geez, I thought it was this way, or I thought the government owned the house at the end, or the bank took over the home. So it's great to have the family there and discuss going through the consultation versus just me and the senior. I ask them if there's anybody that they can have at the time of our consultation so that we can have everyone on the same page.
Do you find that sometimes while you're talking with people, other issues come up, and do you have a battery of people that you refer the couple to, especially if they're looking for maybe some modifications to their home, or if they may be looking for more services in? Do you stay current with what is out there in the community?
I do, yeah. There's, since I've been doing this since 2003, and you just build up a network of individuals that when something comes up, a senior asks me, do I know a painter? Do I know an elder law attorney? Do I know a CFP? So I have a network of individuals that I can refer them out to if necessary. And first and foremost, I have to feel comfortable with those individuals. So I've built those relationships over the years. Some have worked, some haven't worked. And so over the years, I've built a good network of individuals that I feel comfortable if my senior needs services beyond what I can provide.
That's great. That's really great.
Yeah.
That's the whole community piece.
Yeah.
We just have about a minute left. If somebody wanted to get in touch with you, what's the best way? Of course, they can always call us at the COA and we can give out your information, but how can they find you?
Yeah, the best way to reach me is on my cell, honestly,
Okay.
617-797-3277. Again, 617-797-3277.
And you live in Situate?
Live in Situate. My office is located in Hanover.
Okay.
Typically, I'm on the road, whether that be doing a workshop at a senior center or meeting with a client, a new potential client and their family. So the cell phone's the best. Email is dave@myhomesteadmortgage.com. They can simply go to our website at homesteadreversemortgages.com, and they can find me there as well.
Terrific. Well, thank you very much. I think
Thanks for having me.
one of the biggest challenges for our seniors is finances and money, and it's a scary topic.
Sure is.
But I think you explained a lot too, so thank you.
Thank you. Appreciate it.